Pickleonia.
Good morning. The tinfoil cap on Bobby is god tier. I was running a little bit late, laughing my ass off at it. Good stuff. It's totally okay, guys. Just DRS the float at a penny, right? Bankruptcy bullish. I mean, if you're down 99%, everything is, right? With a small investor, a low percent rebound. I mean, it could, like, there can be volatility and stuff there, and shit could happen. They could get a bailout loan for their bankruptcy, like Revlon did. Like, I doubt it because they already got one, but it's so the risk is so high, right? Why bother? I have 25% of my port left in cash. When can I buy the Bobby float? You've almost got enough. Can you explain how Gex charts you share daily and explain and how they should be understood? Well, the first part about understanding them is that you should understand that the calculations used on the website that I use to compile those charts is questionable at best. There are flaws in it. I mean, basically, you can interpret higher levels of gamma as support and resistances, and the amount of gamma in between is the stock's ability to move through that level. You have like you'll have like high and low points and positive and negative gamma. You'll have your flip point, which is kind of like a shitty gamma neutral. Um, which we saw Friday a lot, right? Like we could cross the gamma flip point over and over, but gamma neutral was like a fucking rock, right? Um, so the flip point can matter for intraday trading, but that's about it. And mostly you can just kind of think of it as a point where price volatility picks up. Um, but these are like your upper supports or like upper targets or upper resistances. So like the price will be drawn to these larger points in gamma, but it's hard for it to pass that point. And the same with the downside. If we're in a negative gamma environment, the price is drawn towards the large piles. It's really not very complicated. With major earnings coming out this week and FOMC meeting next week, what are your expectations right now? Well, I mean, I expect the Fed to continue with their rate increase. I don't think anything's changed there. 0.25's on the table. 0.25 is pretty likely. Price stability is so far unresolved, right? And we're not showing any signs of returning to a stable price environment. And so, um, regardless of the PPI print, core inflation is still up. PCE is still up. We'll have another PCE report before the Fed meeting, which will hopefully give us a little bit more information. But I expect with the pump in oil over the last month, that's going to continue to move up. Oil, went up like 20% in the last month, so that's not going to be good for PCE. I think the Fed's just going to continue with their rate increase. I guess there's a possibility we see them change the target rate. That might be a little less likely right now, but it's possible. I don't expect earnings to be very good, regardless of layoffs. The earnings that have come in so far have been um, anywhere from lackluster to very, very bad. So I think that'll continue as margins contract. In my eyes, the entity responsible for the latest shenanigans has no real reason to stop until the next rate decision. But they do, actually. The thing they're doing cannot persist in a negative gamma environment, right? And it has slippage over time. So, you get that on the back of the large put capitulation. You can get that period of sustained pricing that's propped up, right? But eventually, this is going to slip and fail. It's not infinitely repeatable, right? And as we move closer and closer and they fight back against the move into gamma neutral, it becomes more and more expensive for the position to be sustained. If we fall below and stay below gamma neutral, They're going to want to flip short because there's no more profitability to be gained by buying those 0 DTE calls, right? And then they need to wait for the next reversal in momentum from the downside. I'm not saying they can't pump the market again and start all over, but you can only pull back the bowstring so far, right? This week equals rise of the VIX. Let's fucking go. There's a pretty good chance that, yeah, over the next 2 to 3 weeks, VIX and the market is going to go down and VIX is going to go up. What direction does the long-term trend in the S&P show for likely future direction? How many macro data influence the continuation of that trend? Can you what? I mean, are you talking about just like the technical trends? I would say that the technical trend looks distributive. Um, it's a little higher through the beginning of this year. In February we broke out above our long-term downtrend, but a failure here could bring us right back to it. We're not very far off. If this were like an inverse head and shoulders, it's already spent. You kind of have to go to like a shorter time frame to see it, but it would have already been completed, right? This is your shoulders, and then this would have been the blowout of that expectation. So that would have been done. I guess we could look at like there's a massive head and shoulders on the SPX, which is kind of what looks distributive, right? And we haven't reached February's highs, so we have on this period we have a lower high total. So yeah, I mean a return to this trend is not unlikely, especially if you consider that we still have at least one more rate increase, and earnings are we're having a lot of earnings contraction, and sure, earnings contraction is priced in to an extent. But it's not priced in across the entire market. More importantly, it's not priced into the S&P's current valuation. The S&P is still riding high on the hopes that the Fed will cut rates before the end of the year. Those are still being priced in. And that, a PE of like 28 market wide is achievable by end of year, which is not factoring in the earnings contraction that's priced into individual equities. I'm here for the 6% a day play rumored to drop today. Oh, you got to figure that shit out on your own. Was there any profitability last week? I mean, for for short dated positions, yes. For longer dated positions, no. I mean, there was a pretty large swath of calls between like 4150, well, really like 4160 and 4200 that just simply died, right? Like these never went in the money. They were never really profitable. They were kept out of the money mostly by those massive short call positions that exist from like 41.65 all the way out to like 42.50. These have grown. So there was a lot of profitability and selling calls, especially as volatility ground down into the end of the week. There was profitability in the short put side, which, fueled a lot of the zero DTE buying. There was some profitability towards the end of the week in the put side. We did drop from our intra-week high, but not a lot, right? There wasn't a lot of downside range. Even at its peak, I think our total range for the week to the downside was 150 basis points. So if we don't see any additional moves for SLD on Monday, that would mark our smallest SLD since October of 2021, I think. I mean, the news from Adam Moody's over the weekend is definitely not going to be a big positive going into tomorrow. We don't have any data tomorrow outside of what's happened over the weekend, so yeah, it could trigger a little bit of fear. I mean, Moody's downgraded all the regional banks, or a lot of them, which shows that, at least for now, the fears about regional bank failure or not over. Although how much you can trust Moody's is questionable. I will say they're not generally a big fan of downgrading banks. 428 puts still on the table, but cut after tomorrow. I mean, you could, or I don't know why. Here's something I don't understand right now. There seems to be an assumption that we're going up for Opex. Maybe someone could help me understand why. I mean, the current trend and the breakdown of the long side in SPX doesn't look like something that's over tomorrow. If anything, it's something that's accelerating. Yeah, my espresso machine's working right now. How is longer dated positions building up on SPX and SPY? Not significantly yet. VIX is low though, so I'd imagine if we're going to see, I mean, in futures is a totally different story. Futures are massively leveraged to the short side already. SPX, we really haven't seen as much. We've started to see, over the end of the week, from Wednesday, really. Once we got that big breakdown from 41.50, we started to see more long-term positions being built up. More importantly, we started to see long-term call positions sold off. A significant amount of sell-off from the 519 strike, and over the next 28-day period, right? We have not seen a lot of leverage build up to the downside. There's some coming in slowly. But also you generally don't see that repositioning occur until this week, right? Until after those SLD deposits are settled out. So we had the VIX expiration, we had the SLD, we had OPEX. Those are out of the way now. Now we're more likely to see longer term positioning come in. But remember, any downside that we do realize, the volatility is going to be high because of the amount of zero DTE interest, right? What's the implication for the potential smallest SLD with the market on a rip beforehand? I mean, it could just be that a lot of the propping that was going on with derivatives just diffused the effects of SLD, right? Like we had a bunch of big sell-offs through the SLD period. like 30, 80, 50 BPS moves to the downside. Like big, but they didn't last long, right? An hour, 20 minutes, very, very short, right? And then, that call buying would flood back in and push prices back up on the short side capitulation. So, it's also an unwillingness of participants to buy anything farther dated, both long and short. That's kind of creating this channel lock, right? There isn't like a significant hedge pushing either way. Does zero DTs force a lower margin requirement? No. I mean, I assume you mean on the sold side. Not really. If anything, there'd be more risk because there's more OI. I mentioned a few days ago that after SLD, there tends to be a bump as people re-enter. That's usually towards the middle to the end of this week. Generally speaking, like if you look back in where's a good example of this? Like August, it was like the Wednesday after. Oh, here, sorry. Yeah, August. It was the Thursday after. I think this is December. That was SLD. Wednesday after. Back here in February. It was almost it's hard to tell because the candles were red horse, sorry. It was like right here. Yeah, Thursday after. So there tends to be a little bump following that period, followed by a bigger bump as we move into like what would be like the next month's like ETF FTD period. Because these actually create shitloads of FTDs, these big pumps, especially in like QQQ and SPY. So something we've been seeing a lot more of lately is QQQ and SPY FTDs going up. So I think this is partially a byproduct of that, and then partially a byproduct of moving positions over 2 weeks into the Opex period. The Opex effect is probably more significant, but there are a lot of FTDs in that period also, and they're not just in the indexes, right? They're across all the stocks in the market that have ETF exposure. So I'm sure the ETF FTDs have some effect there, but it's not a ton. I don't really think the assumption is up for OPEX, more that they will just keep propping things up with zero DTEs for too long. But that's slipping, right? I mean, it seems obvious to me that the ground gained by pumping with zero DTEs is gone, right? Like the position is they're losing their ability to do it over time. I mean, they spent $6 billion on like Wednesday to lose $1.40 a contract. So I mean that kind of shit can't continue for long. On Friday, the 4140s closed out of the money. On Thursday, the 4140s closed out of the money and the 4150s. On Wednesday, the 4155s closed out of the money, of which there were like 120,000. So I mean they've been losing on the back end of this price action almost this entire last week. I feel like even just with the price data, that's very visible, right? As you know, most of the price improvement in this period peaked here, right? We had very little price action above that point. A few bursts, but that was it, right? Hey, if you really look at it on scale, and that's almost 3 weeks ago. So yeah, this is running out of steam. Now, does that mean we're just going to drop to like a slightly lower level and then continue it? That's possible. You're averaging down on your T position after the earnings drop. I listened to the call. I didn't hear anything worth the giant sell off. I think people just kind of want to pull exposure from telecom, but I think I had a buy set for 18. I don't know if it filled or not. I'd have to go look. If I hope I did. I mean, it's already bouncing back and it's kind of out of my buy range again. If it continues to fall though, I mean that's the price range I like on it. Anything below that I like a lot. I don't think they're going out of business or anything. I don't think there's any risk there. They do have a lot of debt. They're kind of slow to roll out. New growth is kind of the biggest problem with them. They need to find avenues for growth, and that's just really not. It's really not a great environment for that right now. But their dividend's nice. It's like 6%. Does the price of VIX have any relation to IV on options related to the SPX? Yes, very much so. I'm playing any earnings this week? There's a part of me that wants to buy like 5-cent puts on everybody that's reporting this week. That's probably stupid, but might not be bad. SLD's not over, Lawrence. Also, how's Amsterdam? Hopefully, you get a dump to 3,600 this coming week. That'd be cool. Yeah, I wouldn't. I don't think I'd be complaining about that. Big Daddy Jeff. Innings him ukumu minimum jaham. Okay. Is it really that helpful to discuss a typical post SLD week when SLD was exactly typical last week? Wasn't exactly typical last week? Probably not. But, it's a data point that we should pay attention to. I guess what I mean to say is that this entire time, this prop up hasn't really been profitable. Well, that's not true. It was very profitable at the beginning of it. Obviously, it's a necessity, and I don't see a reason they can't keep it up for another week. I don't think it's that they can't keep it up for another week, but it becomes a losing proposition, right? Like you can keep this up if you're gonna break even on it, but it becomes extremely expensive very, very fast if it's a loser, right? So, from the beginning of that pump through now, they maintained some semblance of profitability through this period, right? Even though it was low during, the lower end, like on the lower end of this, it was probably not netting a lot. It was still profitable. It wasn't until SLD where that profitability turned, right? And since then, we've seen a significant drop off in the amount of zero DTEs being bought on the call side, and we've also seen a significant reposition of longer dated bullish interest, right? So from Wednesday forward, all we did was see, or all we saw where, you know, like 4150 through 4200, like bullish calls fall off the chain, right? We saw profit taking on a fairly significant amount of in the money bullish positions. We saw an increase in call selling. And we started to see the spread of the short puts, right? So this would tell me that their intention to continue it is dying. Or at least a lot of, I mean, I don't think there's any one institution doing this. I think this is several institutions acting, um, at least with the same goals in mind. Because I don't really think anyone by themselves is big enough to pull this off. Maybe there's a couple, but it would be expensive. But I think slowly some of those institutions that have been working to that same end are giving up. Now that could be that they've sold off their long positions, right? Those long positions that they've been protecting or trying to protect, they've closed, right? And then, you know, over time, you know, if 90% of institutions at the beginning of all of this needed to get out of their equities, right? Then, you know, they're all working in concert towards that goal in the like February, where the push is very strong, right? But, you know, on this push, fewer participants, right? Maybe like 70 or 60% of them needed to get their bags out from underwater, right? And then, you know, on the next push, it might be like 30%. And that might not be enough to prop up the market, considering that everybody that's out is now bearish. Right. So you have that shift across the entities that, you know, have a common goal like that as more and more shift to the bear side. Like a slow accretion. And if you look at the peaks of those like big pumps, right? Like August, Feb, now, you know, they've gotten weaker, right? Like, I mean, all of them are weaker than the prior one. I think in this period we actually got some bullishness, right? Between here and here. I think some people actually went long here. The beginning of the year looked really good. Things were getting on track until inflation started slipping again. But now they're getting a little more bearish, right? Like we're not pumping nearly as high. Volumetrically, it's, you know, half of what it was in February. I hate AT&T, but I got AT&T fiber and it's legit. Nice. Imagine trying to tell our Bobby about the risk for over half a year, and then imagine not being allowed to post today. They ban you? What do you think about Google and their search engine moat getting wrecked by Chat GPT? Or do you think that's an institutional narrative? I don't think their moat's really at risk because of Chat GPT. I'm sure Google has their own advanced artificial intelligence projects that are probably leaps and bounds ahead of a chatbot. So yeah, I'm not particularly concerned. The simply, I mean, if you're training a bot, you know, your bot, Google's bot's going to be better, right? Because it has more data, way more data. All the data. Also, Chat GPT is stupid. It's confidently incorrect on a number of subjects. It only knows what it's taught, right? It's a great tool. It's a good like efficiency tool. Regarding profitability, I made a good bid on medium term puts, bought it over sold prices, and cut within a day. Nice. So, do we expect more downs after SLD, especially with the earnings we get next week? I think so. Obviously, earnings are going to play a big part in that. I would be cautious these next 2 weeks. We have some very, very important earnings, and if any of them come in significantly better than expected, obviously that could change the Amazon or Apple primarily, maybe Microsoft. Although Microsoft already kind of pulled back their expectations in their Q4 report and Q3. They were pretty upfront about the contraction of their margins. But I mean, those definitely present not just a risk to playing those earnings, but a risk to the market sentiment turning again. And then we might actually have to wait for like a macro data point like the Fed. Time for bear call spreads. Every day is a bear call spread day if you sell them at the right time. That's on KSS. I haven't looked at it in a really long time. I don't particularly like them. The CEO is buying stock. I know that buyout that they had going failed. Does anybody fucking shop there? They should cut their divvy, right? Like if I was buying costs, I would want them to cut their dividend. Why the fuck are they paying a dividend out? They don't make that much money. Their growth sucks. So that's the first thing I'd wait for, is I'd wait for them to cut the dividend. I think it's absolutely ridiculous that they still are maintaining one. Bard is Chat GPT on Google. It already exists. I mean, that's what they've released publicly, though, right? I don't think Google's AI focus was on chatbots. Personally, I could be wrong. But that could be a problem for them, right? The thing that like OpenAI did right was they just focused on like a simplistic form of AI that they could get out publicly quickly and that would generate interest, right? So and Google in the past has been known to overdevelop things, right? Instead of they've spent so much goddamn money on R&D. I'm sure they have products, right? But those products may still be years from realization, and yeah, being first to market can be really important. I think that's why everyone's rushing to talk about AI now, because they don't want to get blown out by the first iteration of AI that comes out. Although maybe for the long-term goals of humanity, it's better if we just have a shitty version of AI. Dear Mr. Pickle, I want to express my gratitude for the information that you provide. Your content is incredibly valuable. I've learned so much watching your videos. Your insights are unique and informative. Thank you. Thank you, Morpheus. I appreciate it, man. People can afford to go shopping? I mean, at Kohl's, yeah. Costco's have to have income for times when they can't sell on a pump. Are we getting the Doom Crew together? Doom Crew together later in the stream? I don't know. Maybe JFresh and Dork are too bearish for you guys. I do want to speak to something that I've seen in the Discord a lot. I think there's this presumption that I'm like super hyper fucking bearish all the time. But I've straddled the market like 118 out of the last 120 days. All right. Like I might sure I have long-term puts, but I'm still buying straddles every night. Hi Norbert, long-time listener, first-time caller. I love your recipes. One question, cinnamon, always, sometimes, never. Sometimes? What's up, trash? So, I mean, I think the important thing to take away there is don't get overly biased about anything, right? The bear case is strong. I think even if you're a bull, there's no denying the bull how bulletproof the bear case is. It's tough to see anything past it. And the bull case is weak as shit and largely based on, the greater fool theory or the Fed just giving up, which is not actually bullish, right? So, I mean, but don't ever get so obtuse as to think that like nothing can happen between now and the realization of the bear case, because there could be a lot of time in that period. um and I put it really well when I was drunk, but I forgot what I said. There's a lot of room between this whole thing is fucked and the actual fucking of the thing, right? You have to woo it. Check DMs for Bobby. Oh, these are amazing. I'll throw the Bobby tag back on the stream tomorrow just for you, Pigeon Teeth. What are your thoughts on oil? There seemed to be some lock at its price ATM. Asking in relation to ZOM earnings on Friday. I mean, oil over the last quarter was pretty low. I don't think oil earnings are going to be particularly great. Seasonally, we're moving towards a higher demand. But I think, well, if my theory about the Treasury shorts is right, I think over the next few weeks, we're probably going to see oil get shorted down. Now, the problem with that though is like if oil goes down again, is OPEC going to restrict even more supply, which is possible. Um, I'm long oil. I'm probably going to stay that way at least through the summer. I don't think I have any intention of getting out. If I see cheaper prices than my current buy-ins, I'll probably take advantage of them to some degree and just try to be patient with it. But I do see a higher price for oil before the end of this year. Might be a little while, but I think we'll get there. Apologies if you responded. I may have missed it. Yep, rewind. Rewind to your first question. All right, let me see what the nerds are doing. You have to call them the Doom Crew. You know, you have to remember that Dork and JFresh, neither one of them have been doing this a long time, and they are prone to flights of fancy and overly emotional bearishness. The market hasn't sucked all the hope and dreams out of them yet. Soon, but it takes time. Yeah, they're not dead inside like me. Someday. Is there ever a good reason to not hedge positions? Hedge positions coming earnings? No. It's probably a good idea to hedge binary events. Generally speaking. I mean, you don't have to hedge a ton, right? You can hedge a little bit, but you should hedge. You think gold is topped out here and is headed for a bit of a pullback, or just a reasonable correction and smashes past the 2K wall? I think it'll depend on risk factors in the macro environment. Bigger risk factors are gonna, if any bigger risk factors rear their heads, gold is gonna go back up. Um, it's generally it's I mean it's kind of like the VIX, right? It's like an indicator of fear. Anything interesting on GME liquidity wise? No, not particularly. Um, CVVWAP started to recover into the end of last week with the falling market. It's still not back at zero, but it got pretty close. I think it got back to like -4. We're starting to see like a little bit. We started to see like a little bit of liquidity realization over the last 2 days, which usually comes with active fund sell pressure. If we start to see our reversion, it should give us a few days of warning. This indicator's been very leading in the past, right? Once we start to see a decline in illiquidity, we usually have a pretty big period of realization before the actual run. Um, the same is true in previous OPEXs as well. If we go back to like, May, you can start to see a significant amount of realization long before the price of the stock actually runs. Uh, March was the same deal. So yeah, I'm not particularly worried at this point. I'll let everyone know if our tips cross, but right now it kind of looks like shit. I think we're probably gonna head down more. Um, yeah, even the more sudden realizations, like where's October? What the fuck is this doing on here? Where's October 31st? Yeah, even the more sudden realizations, we get a little bit of lead time. We get that breakdown. So we at least know like 8 to 5 days in advance. That's cool, right? Telling the future. It's not impressive or anything, but we're not using the constant maturity DSGs to assume liquidity, right? We're trying to figure out based on the constant maturity rate where yields need to be. And we're not really sure if that aspect of it is important yet or not. Although, yields slipped below, slipped above constant maturity rate on Thursday last week. And we saw a significant amount of buying of, duration hedge in the 1 month contract. So I think we got something there, but we don't really know how to assess it yet, right? That's a lot of, this, as far as the scope of our theories generally go, that's a lot of information to process, right? And we're looking at multiple markets. You've got swaps, treasuries, treasury futures, and we're trying to correlate all of that. Although, I thought the treasury liquidity thing back in October was insurmountable, and we managed to be right on that one. Took a little while to be realized, but it's impressive. You know it. I know it is. Cool. Now do that for SPX. Oh, we have ways. Why Upstart is not going through forced settlement when being so long on Reg Sho? Does Reg Sho even matter? I mean, I think the mistake you're making here is thinking that the forced settlement matters. Reg Sho matters, but the forced settlement isn't significant, right? Now, if Upstart stays on Reg Sho through the period where the FTDs created during the most recent run are realized, right? So if Upstart stays on Reg Sho from the period that these FTDs were made, that becomes far more interesting and tantalizing even. But right now, Upstart's becoming more illiquid. Bots is becoming more illiquid. IWR is becoming more illiquid. None of these are trending towards a realization of liquidity. So I expect Upstart to continue to drift down. I don't know how far it'll go down. I mean, like my targets are kind of like 14 through 12. I'm generally pretty happy buying Upstart anywhere in that range because I think my cost basis is like 1480 now. So under 1450 is prime territory for me. Now from when it was listed on Reg Sho till now, which I think is about 15 days, we're at now. I need to update this chart because I've been a little bit lazy with it, but we still probably have about 20 more days before any kind of realization occurs. Now, yeah, if it stays on Reg Sho through that time period, and then all of those FTDs have to be realized while on Reg Sho, the fail to volume ratio is gonna skyrocket, right? The fail to volume ratio for this period was already extremely high, but it'll go even higher, right? And that's where you start to get like that compounding effect that happened to GME back in like 2020. That we discussed so much here on Upstart. So Upstart might finally be moving into that, but we'll see. The last few times it went on Reg Sho, they managed to slip it and clear up the FTD problem. I don't know if Upstart's maybe affected a chunk of their buyback. I would say the liquidity doesn't look like they have, but that's also a possibility. They don't call you the soothsayer of Staten Island for nothing. I would say swap exposure is probably highest with Wells and B of A. I think maybe Citigroup, JPM after that, CS. I think UBS and Deutsche are probably pretty insulated. Possibly Bank of England. HSBC might have a lot of swap exposure. If I had to guess from the last time that we had any available swap data, I would say B of A, Wells, Goldman. These 1 and 2. These in no particular order. Actually. And then these in no particular order. Upstart was on Reg Sho for over 30 days in a row last September, and Upstart and all the price did was go down. Well, the thing is, this time on Reg Sho, the price went up. The volume was low, which isn't great. Obviously, the ideal situation. Let me try to explain it like this, so people have an idea of what I'm looking for to happen on Upstart at some point, if it ever does. Would be for Upstart to fall on Reg Sho. And then have a large volumetric run. So 30 to 40% run, maybe greater, possibly. With 20 million or more volume. This is ideal, right? Because this is going to create a huge amount of failures that they're not going to be able to net out on low volume. If you have low volume failures, right, then the quantity, the sheer quantity of failures isn't sufficient, and they can be netted. Which is what we've seen happen in the past with Upstart, where it's gone on Reg Sho and maybe run a little, but not enough. And, we got some reciprocal price action from that, but not a lot. So if we ever get that scenario where, Upstart lands on Reg Sho, runs hard, and this run isn't bad, right? It's 43%. It was on Reg Sho. The volume over the period's kind of insignificant. But it's not terrible. So it could be enough. I don't know if the price improvement was enough that they can't net it by getting it back to spot. So if they can get it back to here, might be dead. But if they can't, then it starts to become like GME, right? Because that's what happened with GME. Is GME got on Reg Sho and then it pumped, and then they couldn't net, right? Price traded flat, and then it pumped again, couldn't net, price traded flat, and then it went apeshit. In the past, when Upstart has run on Reg Sho, they've been able to net it, right? So fingers crossed. I mean, I'm still bullish on it. Nothing's changed on that front. I own more of it now than I did when this all started. And I'm significantly more synthetic long at $15, but could take time. I would expect that the period for that to happen would be when credit markets stabilize. So the Fed officially pauses rates for however long, or for the foreseeable future, or begins rate cuts, because then, Upstart can offload their balance sheet, book value goes up, credit markets stabilize, they start making income again, right? Then they get to run the AI fucking hype train also, and the value can go up, and the value can go up quickly. And I think that's all the catalyst it really needs. Then they could tack the share buyback onto the back of that, and it could do something really impressive. The vol shorts are still very active on Upstart too. It's yielding now better returns than GME on covered calls. Do you think the vol shorts are so scared of high price volatility, or HPV, if you will, because they don't want to get cervical cancer? Yeah, the price volatility on Upstart's insane. I mean, when Upstart's returning like 10% a day on a 100 BPS move on SPX, or like 120 BPS on NASDAQ, that's good stuff. When do you think that would happen, in your opinion? Late 2024? Probably early 2024. I mean, this could run out of control for them before then, but I would say that the Fed's probably only needs to hold rates above inflation for like 3 to 6 months, or a market crash and the shorts get out. What's the easiest way to diversify? Buy different things. No, I don't trust ETFs anymore. They all provide liquidity. That liquidity is all provided at the cost of the shareholders in the ETF, right? And so the management fees only represent a small amount of the potential lost over time. Mutual funds are probably safer, but the returns on them are significantly worse, right? But Gorg, Kathleen Woods said Tesla to 5,000. No one thinks that. She just bought a bunch of Tesla at 200, and now she's pissed. I don't know who cares about Kevin's meat. Could you take a look at MO? Seems to be hitting major resistance here at 46.25 or so, being in a trend since last July. Curious of your thoughts. They haven't been doing well. They probably need to scale back their dividend. Too much capital expenditure on marijuana without any realization of federal legalization. And they're just boring. I mean, who gives a shit? It's got an 8% dividend. Does it really fucking matter in 4 years if you buy it at 46 or 43? It'll probably drop if the market drops. You might get a chance to pick it up at like 43, 42. How would you do with some assigned SQQQ? Does it ever go up, or only decays downwards? It goes up if the market goes down. That's how the fund works. Generally, if I get assigned on it, and I don't think the market's gonna go down, I'll sell covered calls against it in the money. That way I can take advantage of the market rising and the volatility decay, and hopefully still get assigned. I'm not a big fan of holding SQQQ for any significant periods of time. So I usually try to get out of it pretty fast. Although in the past I've had SQQQ assigned at higher prices and then just sold in the money cover calls over a few weeks as the market rose and then, closed out on a bounce. And that's been fine. You can always sell, like, if the market's like trending over a period of time, you can always sell like bear spreads as you sell your in the money CCs. What's up, Cork? Jeppy to the moon? Fuck off, Torque. Alright, hold on. Is that working? You should be able to talk now.
How you doing?
Doing alright, man. How are you?
Doing great. Having some corned beef hash, hanging out in the office like a
Nice.
hermit. It's wonderful.
I'm still hungover.
Still?
Yeah.
Don't they have someone who does like IV services in New York where
I
you can just go?
called I called them this morning, but they didn't show up.
Oh, dicks. You're just gonna
It's
let you suffer?
it's shockingly cheap to have a nurse come and hook you up with an IV. It's like
How much are you talking?
it's like $115.
I'm glad that's shockingly cheap. I guess it is when you think about how much medical care costs.
Yeah, right. Like, I mean, if I went to an emergency room and got an IV, it'd be like $4,000.
Right? Yeah, exactly. You get an entire clinical evaluation too. I mean, these nurses are just gonna show up and IV you and not ask any questions.
Yeah.
So, what'd you guys go over? I didn't have a chance to catch the stream
No,
so far.
I haven't really talked about anything.
Gotcha. So kind of the usual port
Yeah,
management
yeah,
question.
just people asking like puts or calls. What do Gork?
Hey,
Should I buy this stock? Should I buy that stock?
like generally I like to make fun of puts or calls, but I think the Sunday stream is probably like the if there ever was a safe space to say puts or calls, I feel like the Sunday stream is probably that.
I I did my best to give my evaluation of the market in the short term and
I mean,
warned people to hedge earnings.
yeah, I mean, short term the market is just kind of being being a saucy little minstrel. It's I don't know. I'm sitting here with my puts and I'm like, yeah, this tech, like it looks like it's going to turn over from a technical standpoint, from a macroeconomic standpoint. But the hopium in earnings, right? The hopium provided by earnings can be strong enough to send this thing up to 4,200.
I don't think we're going to 4,200 personally. I think Jay Fresh, if he ever fucking shows up,
He's
um, will
I heard somebody just say we're going to 4,200.
that was Dork. Dork was saying
I
that
didn't
he
say we're
doesn't think
going
it's
to 4,200.
impossible.
I'm saying
What
if
about all
like
the short calls that just didn't allow the market to move higher for the last 3 weeks? And now there's even more of them.
well they could there's still a chance. I mean, like I'm not saying if tech companies are still alive, SPX to the moon. I'm saying that over the course of like 1 or 2 months, if earnings turns out to not be so bad, like Tesla was an outlier sort of thing,
I
then
see what you're saying.
there's enough hopium in the market to push it up further, right? Like if tech earnings this week is not that bad, then I'm probably gonna like roll out to August in like a really
So you're saying
position.
Matt earnings.
Yeah, I mean, I expect earnings to be probably at this point, we're going to start seeing some of the effects of the tighter lending market. You're going to see way less SG&A from a lot of these big companies, I think, is kind of my big prediction. Whether or not the market becomes sufficiently bearish from it is a completely different question. You never know if these companies are going to do kind of like what Meta did, where they just announced they're going to buy a fuckload of stock. Something like that. I mean, that something
But
like
they've all got outstanding share buybacks at no money.
Yeah. So, I mean, if you hear any updates, like in their earnings call, if they talk about slowing back their share buybacks and stuff, I mean, that right there could be enough to sort of send us down a bit. But it's almost like the market is just not even processing sort of the macro data and some of the warning signs, right?
Yeah.
Like, it's not even considering like what Tesla's earnings was like, even though they've already slashed prices so much. And I know they have a decent backdrop, or a backstop to do this into, but people are still assuming that that is the winning business model, right? They're still assuming that Tesla, as a growth stock, right, can outperform, when the reality is that if you haven't transitioned to being a value stock, you risk your multiples getting destroyed, right? Like Google's going to have to position itself as a value stock. Apple is already a value stock. Amazon.
I don't know. What's Apple's PE ratio right now?
It's crazy high, but they're positioned as a value.
Isn't it like 2025? So somebody thinks it's reasonably in 10 years going to be worth like $25 trillion.
I don't, but I'm not saying that it's going to do that. I'm saying that as a company, they can continue to issue dividends and things like that through a downturn.
Yeah,
that's the real.
I mean, the thing about Apple is they have so much fucking money that it's just like, even if their price falls to a more realistic PE, which it should, it's probably still going to stay above like 100.
Yeah, I don't think anybody's gonna argue that. And I love Apple. I just transferred a shitload of money to their new savings account.
That's basically buying treasuries. Nice job.
Well, I mean, it's kind of in the middle, right? I want that money to be a little bit more liquid, but not, it doesn't have to be in the checking account ready to go, but it needs to be like one step away. And since it's there, it might as well be earning money. So I didn't want to lock it up in anything that was had a waiting period. But yeah. I mean, looking at this earnings week, there's a lot of potential for a lot to happen. And looking at how low that volatility is right now in IV, this is actually one of those periods that is sort of like begging to be straddled.
I agree.
And I feel like a lot of people here have been practicing their straddling for a long time. And I mean, this is your moment. It's very unlikely that we're going to leave this week where we started, kind of like last week, where we changed like 0.3% or 0.2 or something like that.
I'm just going to sell, me and Dork are just going to sell triple inverse iron butterflies. We're going to make 30% on capital every day this week.
Speak for yourself. I don't have the margin for it.
Yeah, more power to you. But yeah, I mean, like Alphabet, Microsoft. Who else is a big one? Raytheon might be one, just to see how those folks are doing. Visa.
I actually feel like Microsoft and Google are going to be some of the more conservative earnings in this period. They've been pretty conservative with their projections. They were pretty upfront about margin contraction over the last couple earnings periods. I don't expect big surprises out of either one of them. But I do think that the market will react extremely unfavorably if either one of them underperform their already meager expectations.
Yeah, like the expectations for earnings this time around
is
are
so fucking low.
They're like the 20 like April predictions lows, right? Something like that.
Yeah.
Like,
If your company misses this quarter's earnings, your company's a piece of shit.
yeah.
And the
And
market's going to view it that way.
even if it meets, it's still not like that. That's like meeting just means the analysts did a pretty good job,
Yeah.
right? But if they miss, that's terrible. And the expectation, I think, is to beat, right? When you make expectations so low, the expectation is really for a beat, so that you can get a positive.
I don't think they're gonna be able to pull it off on the half beats like they had in quarter 4, where it was like, our revenue's fucked, but look at our EPS. And I don't think they're gonna pull the wool over anybody's eyes with the non-GAAP reporting either. I think
Yeah.
analysts are gonna be digging a lot deeper into the GAAP, and the expectations are going to be stringent.
Yeah, I don't
Yeah.
know. I mean, I would love to see that, but I don't feel like analysts right now. I think a lot of them are looking to longer horizons and just looking to the next bull market whenever it may come, and are just kind of like, here's where I want it to go long term. I don't think anyone's really looking to try to nail down, how much lower these things are going to go. And I think that longs right now, they're in this area of complacency where there's enough uncertainty in the macro environment being bad that they can just kind of ignore it. It's not like shouting in their face that this is gonna, go to shit right now. And so they're just kind of in autopilot mode. And unless something is going to move them out of autopilot mode, I don't see, I don't see longs really doing a whole lot here. Really the only saving grace of the market right now is that the options chain is just sort of saturated at the top, and there's not a whole lot of room to continue upwards. And so, if they want to continue going higher, they're going to have to put in more money, substantially more money.
Yeah.
But to keep it where it's at, they just have to kind of just ignore this week. I don't think that any of the earnings are going to be so surprising to the downside that.
Here's my next big woe prediction. Dilution. Large scale dilution everywhere. Even if the analysts are unwilling to accept that these companies' valuations are driving down, the companies themselves would be doing a disservice to their shareholders by not taking advantage of their extreme overvaluations, right? So
I don't understand why they're not doing it.
I think capital raises have to be getting close. I mean, NVIDIA already did one, and the market just ignored it, right?
Yeah. It was what, like $10 billion? It wasn't very much.
I mean, it was 10 billion. Well, NVIDIA wasn't very much when they did it. Now they're a lot more, right?
Yeah. Well, yeah, I'm thinking about how it's like.
But NVIDIA doesn't. I mean, they didn't have a lot of cash, right? They've got a $30 billion share buyback and a little bit, I think, less cash than that on hand. So, it made sense to them to do a capital grab. But I think we're going to start to see that out of more and more and more companies into this quarter and into the end of this quarter. I think we're going to see a lot more dilution.
Yeah, I mean, I would do it
because they already know their earnings are contracting, right?
If I was NVIDIA, I'd be clobbering.
If I was NVIDIA, I'd do a $300 billion offering right now.
Why not?
Yeah, I'd build my own fabs.
Oh no, what's going to happen? The price is going to go down to $100.
Who gives a shit, right? Everyone, Jensen already sold the top last year.
Well, I think the biggest thing that I think the market is getting wrong is the V-shaped recovery. Like if you look at analyst expectations out a year, like they're pricing in like a massive growth spurt in 2024, or they're not pricing, but they're expecting a massive growth spurt, right? So we had a growth scare in 22.
They're expecting a massive recovery, just a sharp, rapid recovery by the end of this year.
Yeah.
It doesn't make any sense, right? And so there's.
I mean, part of that's still them pricing in Fed rate cuts. Like they've never stopped pricing those in, regardless of what the Fed said.
Yeah, and it's just like like, growth scare was priced in June, I believe it was. And then it was priced back out, through August and then through now. All the and it comes down to the inherent bullishness of equities, right? The idea is that the most forward looking instrument out there is the stock market, right?
Yeah.
So you get this sort of thing where you're like, okay, we got the growth scare, and then we waited a quarter, and then companies actually did okay, which means we're in for growth, right? That's kind of the whole thing. Like you just move your time horizon out further, right, when things are looking bad. And right now, or the time horizon is, it's like 8 months to a year before growth returns to the market and everybody's happy. But at some point, the writing's going to be on the wall that this may be protracted. And once that happens, right, once the time horizon becomes really unclear, that's when the market enters sort of that, like, heavy stagnation with, periods of extended bullishness and then extended bearishness akin to the 70s. But it'll be faster thanks to the speed of information, right?
Yeah.
So it seems like most of these, I mean, Amazon, Roku, Meta, Alphabet, Microsoft, McDonald's. I mean, these all really big stalwarts that are all, super overpriced right now. Probably won't show anything that's really going to rattle anybody either way. What about Credit Suisse tomorrow morning before open? And First Republic Bank, and
Credit
First Republic
Suisse,
Bank
last
tomorrow
I
after close.
understood, Credit Suisse still not bailed out,
Yeah.
All that swap risk and no bailout
And
money.
I know,
It's like the governments of the world are
technically
failing their banks.
I know technically that what the Fed did is not quantitative easing in
okay. Thank you.
in the sort of technical sense of the term, in the sense that they didn't add money to the economy. They didn't add money to the economy, but they prevented the in a sense, they did sort of do what they did in quantitative easing, because the FDIC, as far as I know, the last time I checked, they're still sitting on like over $120 billion worth of instruments that they're saying they need to sell but aren't selling. And, obviously they need to try to maximize what they're going to get. But as long as they're holding that, right, and not specially selling and then specially assessing to other banks, I mean, isn't that easing?
Mechanical easing.
They have purchased securities above market value. Okay. Well, I'll be okay. We can call it qualitative easing. This is the era of qualitative easing. I mean, until they get that off their books, it's technically, to me, is easing of some kind, right? They bought securities.
I mean, the Fed's almost already shed that whole facility. Have you looked at the Fed balance? Also Treasury balance should be wrapping, like the Treasury deposits should be wrapping up this week, so we should start to see volume come back into the market.
Yeah, I haven't looked too deeply at the different baskets that the Fed publishes, but overall,
the discount window's been closing, but
even turned up a little bit.
The reserve balance was dropping.
Yeah, they're still tightening. They're still letting their existing securities expire and roll off the balance sheet.
Well, don't forget, also during this time, they're offloading all of the like maturation shit from 2008 to the banks. So the banks are still taking on all of that.
But my understanding was, and I'll have to double check, that the I can't remember if it was the discount window or the new facility that they opened, or both, but one of them turned up a little bit again.
Interesting.
Didn't Schwab do something with getting free money?
Was it like the repurchase agreements and foreign officials? I know like the repo's been just driving up the whole time.
Oh yeah, repo's high because the money markets, but let me do some digging. Hold on.
Yeah.
Should I talk a little bit about my
Got it.
tinfoil about the 1 month?
Yeah.
So, Kirk and I were kind of talking about this last night, but the whole 1 month anomaly, right, where it's tanking to the core of the earth right now.
Mm-hmm.
Like if you look at the daily, it's kind of it should be alarming, right? What's happening with it? The massive divergence from the overnight repo rate and the split of trend between it and the 3 month, right? 3 months been going up. The 1 month has been going down, 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 down. So the 3 month did kind of turn over a little bit on Friday, but the 1 month is just tanking. And you know, I have a tinfoil theory that the reason why short-term cash, I know Jay Fresh likes to say it's the shutdown in an inflationary environment. There's some validity to it, but I think that there's a credit crunch going on, and banks are no longer doing overnight lending like they used to.
Mm-hmm.
And now for places to park your cash short term instead of say, freeing it up for overnight lending, instead they're parking their cash in short term treasuries. And that's why I think that the 1 month is tanking so hard. And there's another side to this too, where it could be some of that inflation swap unwinding.
Yep.
Um,
Hedge the
however, if that,
duration risk.
yeah, exactly. And if that's the case, then we should see uh, further and further durations start falling, kind of like I guess like dominoes, but I wouldn't necessarily. That's not like the best analogy, but they would go one after the other, moving up in duration.
Yeah.
And if that's the case, then we're looking at a very volatile, time for the market as that means that the big boys, like the really big players who are doing this with inflation swap hedging, are starting to see either, and we discussed the tail wagging the dog, but that means that the big boys are seeing a future in which rates will not be higher, right? And with high confidence.
Yeah.
So if that's the case, right, if we start seeing like the 3 months start to decline significantly, and then the 6 month, and then the 1 year, by the time it hits the 1 year, there will be articles about whatever's happening. But yeah, if
I
that's
mean,
the case, then
there should have been articles about this, frankly, but
oh yeah, everybody's talking about it, but no one is.
also
Uh,
something I wanted to note that I brought up to you last night, but I don't know if a lot of people are aware of. There's a relative weighting amongst yields. So by driving down the 1 month, you can drive down yields across the board.
yeah, that's right. Because people who do want short-term capital for other reasons, right, they're just going to go to the next duration out, and kind of so on and so forth. People who maybe wanted the 1 year, right, or they wanted the 3 month, but the 3 month is falling. Maybe they'll now move to the 1 year to
Yeah,
get slightly better
well, what
return.
we did see, like if I pull all of them up, or at least I'll pull up a couple.
While you're pulling that up, I want to follow up on the discount window and the Fed lending to bank emergency thing. They did both tick up from April 12th to April 19th, very slightly. I would call it statistically it's flattening out, but it is slightly trending up. So that saga has not yet closed.
Not yet. It probably won't be until something breaks, right? Or until the window closes, one of the two. I mean, it's kind of the thing is all this really did was put a timer, like a concrete timer on everything, rather than say what was happening before, which is we don't know if another bank's just going to collapse because deposits are flowing out, right? I mean, now they can say you won't collapse for a year, right? You got a year to figure your shit out.
Yeah, but the response to that from the U.S. Fed would be, yes, we've had first discount window, but what about second discount window? I mean, you can
That's
just
my
keep
fear.
kicking the can forever, right?
Well, you kind of can, right? But that's assuming that 2 years from now, interest rates will be back to at least 3% level, which I mean isn't unrealistic. Especially if something bad happens. But if nothing bad happens, I mean, I could see interest rates floating around 4% for quite a while. I mean, I like literally the foreseeable future, just because it's a more sustainable sort of business model for the Fed. But
Yeah, and I know you guys are discussing. I think Kirk is still looking for the data he's talking about, and I apologize in the background. That is a toy. It's not a real emergency vehicle. My son is in
I
here
was gonna
playing.
ask.
Yeah, but I mean, I know that I've said multiple times that it is a phenomena of the looming debt crisis, or the debt ceiling issue with the government, and the government shutting down. There is going to be some outsized demand on shorter term treasuries, versus like a 3 month, so that your capital isn't locked up in a shutdown government, and you can move it somewhere else later. But I do agree that the depth of the discontinuity between the 1 month and the 3 month is starting to get a little worrisome. I don't know that it can be completely explained by this phenomenon, right? Because basically it should pull down the 1 month and push up the 3 month, and then that, you know. But should it push down the 1 month this much? It seems quite extreme.
15%. Yeah, that's like an insane move in the treasury market. It's the most liquid asset in the world, right? Treasuries. So, I mean, that much of a drop is really crazy. Like, that's why I feel like it's not just a hedge, right? If it was just a hedge, I could see it flattening out, maybe tailing off, or just a tiny bit, like maybe 2-3%, but 15%, and over the course of a few days is not like, because this government shutdown's been going on for months, right?
Yeah, it seems
And
like the most recent drop off has really stabilized the increase in yields across the board, but it hasn't stopped them.
yeah, and that may have been the intended effect, right? Was to sort
But
of
it
tamp
did. We
down
did
yields.
see a fairly significant decline in T-bond futures.
Oh, you looking at the move?
Yeah. No, I don't have move up
No.
here. Move spiked a little bit. I can pull move up. Move did move up. Briefly, like right here. But barely, right? I mean, it's the 1 month. If it had been like the 3 or the 6 month, this would be like fucking up here.
Yeah, I mean, it's still, what's funny is this still all sort of fits in the narrative of a short treasury position, right?
Yeah.
I mean, these insane, there's still, like, the bond market volatility dropped off, at some point, and then it never really went away though. I mean, it dropped, the volatility dropped off, but the moves in the bond market are still, especially as of recent, they've become more volatile again.
This is the
So
craziest shit to me. Like just looking at it like on the macro scale. Like, you just look at treasury valuations over time. Like treasury futures versus yields.
yeah, no, I mean, and this all kind of comes back to the idea that
But yeah, you're right. I
because
mean, like this is move, right? And move is just rocketed,
yeah,
you know.
but like, and this all kind of comes back to this, the duration risk thing. It wasn't just built in 2021. I mean, a lot of the 1 year, 2 year maturation risk is from that period, but like there's duration risk on the 20 year. People who bought treasuries back in 2014, right?
Yeah.
Or they're especially like 10 year treasuries in 2014, they're like big fucked.
Yeah.
And the only way for them to get unfucked is for literally for the Fed funds rate to be like below 3%. And assuming that's going to happen by the time, all these 10 years, from 2014 through 2017 mature is a really big question mark, right?
I mean, well, hold on. I want to preface this by saying something that I brought up in the Discord last night. While this whole thing looks really, really fucking bearish, right? And the risks involved are tremendous. There's still a very good chance that these banks, despite their interest rate risk, can thread the needle and make it through this period until the Fed cuts rates, at which point they're safe.
Yeah.
And given the scope of things at risk, not only will they try to do that, they will probably be aided in their efforts.
Yeah, kind of like I said last night, like this isn't like a timing the market crash play. This is like a one morning you wake up and you hear that a major bank is insolvent, right? There's no way to tell if and when it happen. You just, at some point, someone's going to say, surprise, we don't have any money.
Yep. Yeah.
So there's no way to time
it. And for me, it's more about figuring out the purpose of, driving the market higher in periods of obvious bearishness, right? And then, not allowing the market to fall into a range where valuations would be more in line with expectations, right? And so, and this is something that we've seen persist throughout almost the entirety of the bear market, and then even more so, is it skewed bullish as rates have gone up, right? So, as federal fund rates have risen, so has the SPX's upside potential, which is inverse to logic, right? But if this thesis is correct, then it explains why the market is not being allowed to fall into these ranges where valuations and price stability would exist.
And it also has to do with forward projections of returns on investment, right? So if the market has multiple sustained years below, say, 3% growth, while treasuries are yielding 4% and above, I mean, you incentivize people to move into treasuries, and that puts your inflation swap counterparty at risk.
Yeah.
So it is definitely a threading the needle situation, and I think that as there needs to be a material improvement in the economy, and at the same time an incentive for the Treasury or for the Fed to lower rates, even gradually, right? As soon as that sort of a situation appears, then I think that everybody's going to feel way more confident. The inflation swaps probably are going to start unwinding by that point.
What do you think of my oil short thesis, that they're going to short oil to reduce the inflation print?
I mean, it's already like $73 a barrel after fucking trading at $80 a barrel for a week. So
77
$77 a barrel.
Yep.
I think you're right. It's, once again, all the data sort of just kind of making more sense now. But once again, it's definitely important to note that this isn't like market gonna crash. But if this plays out with a market crash, we're talking a sovereign debt crisis, not of the U.S. but of other countries.
Yeah.
Which is like super duper bad. So I hope it doesn't happen. I hope they thread the needle, but I hope this is actually what they're doing, because if it is, I think we could probably understand movements in the market to a better degree, which would be super valuable as long as this bear market persists.
Yep. Real question: has anybody considered that our thesis is just wrong? Here, you know what? Walk-in, present a better one.
Our thesis. This is
our nausea.
He has a French mouse in his pocket.
Yeah, I mean, any
it's not your thesis, Walk-in. You've never come up with a compelling thought in your life. It's
actually
our thesis.
Composite Man is pretty compelling.
It's not. He's an idiot. You shut up. Don't you even fucking start.
I think Composite Man as a concept is pretty cool, but Composite as a thesis is not. It's literally nothing. There's no thesis behind Composite Man. It's just a way to visualize the market.
It's just stock market religion.
It's exactly what we need.
It's, I can't understand this, so it must be some giant entity with all-seeing power. Some omnipotent entity is controlling everything. But unfortunately, that's not what incentivizes capital markets. There's still competition, even at the highest level.
Composite Man should be viewed as, I'm taking this amalgamation of investors in the market, and I am going to push them all into a box such that they do compose one giant investor. That doesn't mean that that's actually the case in any stretch of the imagination. All it means is that you are just simplifying market movements enough that it could be easily understood by an individual, right? Because now you're trying to think like Composite Man, who is this amalgamation of individuals, and not like trying to think of, oh, what's JPM doing? You're just thinking, what are they all thinking right now as one cohesive unit? But even that has its shortcomings, and it shouldn't be followed religiously. But Composite Man as a consortium of banks colluding to move markets, I mean, that's pretty unlikely, right? Like, there's probably some things that happen like that, but that's just because they all have the same interest.
Next thing you're gonna tell me, fucking Walken believed that Trump was gonna drain the swamp, and I know.
Drain the swamp? How do you drain the swamp? You can't drain the swamp. Politics is the swamp. How do you drain politics of corruption? You can't. You literally
by electing politicians. Haven't you been on Facebook?
Oh my god!
I haven't been on Facebook in over a year. It's actually been great.
New politicians fix all the things the old politicians fucked up. It's amazing. No, keep believing that. It's important.
Yeah.
I mean, they're not wrong. The problem is that the amount of money being pushed in to make these politicians get elected makes it so you can't actually get good politicians.
So you're saying that the idea of a composite man in the market is insane, but a composite man in politics is the status quo.
I don't know. Ask Walken.
It's a composition of men. A composition of people.
That's called an orgy.
Yeah. That's a better way to put it. That's exactly what it is. Markets and politics are the same way in that sense.
So this is literally the origin story of a religion as the telephone game erodes the real story into the actual religion. The composition of men eroded to the composite man. Yeah. I like it. I like where this is going.
Oh, yeah. But, I mean, in terms of outlook for everything, like, so far earnings has been milquetoast at best. I mean, the banks did pretty good, but that's just because interest rates are high and they were still able to lend over the past year. So, like, I mean,
healthcare is doing well also.
That's just because it's healthcare. People want to get their gallstones removed and all that shit.
Real estate, surprisingly, also done well in terms of beating estimates, at least.
That's there's definitely something about that's kind of screwy. But it probably just has to do with the fact that nobody wants to liquidate. Nobody's gonna liquidate until they need to liquidate. So they're all probably just sitting on inventory and saying, "Hey, look, our inventory went up in value, so we're doing great," you know. And that'll work for as long as it does. But either Gen Pop starts to get margin called on their homes, right? By that I mean they lose their jobs and they can't pay their mortgage, or these big companies that are sitting on a bunch of empty homes trying to sell them at high valuations are going to get outbid by the home builders, and then they're going to have to either take losses or at least mark their valuations more realistically. If they don't, then they're just going to be subjected to more and more short interest, right?
Wait, guys, you guys are getting like really, really bearish. I feel like as the person running this stream, it's my responsibility to present the bull case as I've heard it. What if all those problems just don't exist?
Oh, That's
Yeah,
true.
proof.
Or an even better one. What if the investors don't care and keep dumping their money into it anyway? Which actually is
Well, then they'll just lose
probably
all
the
their
best
money,
bull
right?
case.
Yeah, but then those people just lose all their money.
Yeah.
That's not a
Well-
bull case. I'm trying to point out
real-
the absurdity of the bull case.
So there is a
And
real
you're trying
bull
to
case.
make a bull case.
I mean, the bull case is immaculate disinflation
Yep.
leading to immaculate growth
Yeah.
Well,
in the future. And you
the
got to
bull
buy
case-
the dip and you got to get in at the bottom, which is now. That's
Well,
the bull case.
The bull case is that
It's
bull
always
case-
the
The
dip.
Bears have been saying that we're going to
Wait,
crash.
weren't you here for GameStop? It's always the dip.
Yeah.
Up dip, down dip, all
no,
dip.
No. This, I mean, I've been saying this a little bit lately, but I mean it truly. I mean, the whole stock market right now is a meme stock, right? I mean, nobody's buying all the boring stuff. They're buying all the big tech, sexy stocks and just playing options.
That's
and
not
just
true.
pumping
I
it.
bought 1,000 shares of Devon Energy this week.
I don't know who Devin is, but I hope you guys are happy together.
We'll see.
So-
Find out if I can get into it.
But yeah, back to real estate. I mean, real estate is less clear, I think, in terms of whether it's. I mean, it is going to be bad, I think, when things start slowing down. But it seems like right now, the market is just sort of dissolving. It's not really a very liquid market, and so buy and sell are just so thin that the market's just sort of undefined. And there are some places where prices are coming down a lot, like California, everywhere where it's tech heavy. So California, Austin, and a couple of other places are coming down, but most other places are still flat or rising. And a lot of that is due to the fact that nobody wants to give up their mortgage, right? I mean, I'm never going to give up my 2.8% mortgage. I don't care.
Well, that's until your university blows up its endowment and cuts all its tenured staff, at least.
Well, yeah.
Have you told them to go cash?
Oh no, I can't do that.
Oh.
I'm not in control of anything. I'm just the goose that lays the golden egg.
Just walk in there and be like, I know math. You guys need to go cash.
Yeah, I don't think that'll work.
Oh,
They'll just be
alright.
confused.
Maybe
But
you
anyway,
could get an
yeah,
economist to tell the story for you in a more compelling way.
So we have a bunch of economists here,
Yeah,
and I hate
I
them
know.
all because we overpay them way too
Well, of
much.
course.
They get paid like $250,000 and they don't do anything but teach a few
Well,
classes.
Plato
and-
didn't have calculators, so
Anyway,
Can I address the bull thesis a little bit?
yeah.
Because there is still a bull thesis, kind of.
Oh, go fuck yourself.
Come on, okay.
All right,
So-
all right, but hold on. Here's my only condition: it can't be based on the back of the greater fool theory. The idea that you're going to buy something now that's overvalued and sell it to some other idiot in the future is not a valid bull case.
Well, the thing is that's just been the bull case for the market since assets have existed. But
No.
yeah.
a bit.
I mean, tell
what's-
me a time in history when the market was appropriately priced.
World War II.
Louisiana Purchase.
Okay.
So there is a bull case, and it needs to be addressed at least a little bit. The American consumer still hasn't buckled.
But they're out of money.
They are, and they're able to leverage themselves to the tits. But the bull case is that companies don't go out of business, and they don't, layoffs don't become widespread beyond the super overvalued mega hiring tech companies that are just trimming some fat, right? Like, so, industrials don't have a massive contraction.
So you're saying employment stays up.
Yeah, I'm saying employment, unemployment doesn't go up, right? It goes up a little bit, maybe like a 0.5 percentage point, but doesn't tick up appreciably. In that case, right, the consumer can hang on to this debt and continue to pay it, and you won't get liquidation of assets, right? That's kind of the bull case, is that asset prices don't.
You're
crash.
literally describing stagflation.
I am, but that's the bull case, right? It's not.
Okay. You can't define stagflation as the bull case.
Well, and this is where the bull case does have issues.
That's the market devaluing like 10 years of potential growth all at once.
But
yeah,
how's that bullish?
issue. That's the biggest issue with the bull case is that it assumes we can achieve disinflation without a weakening consumer, right? I mean, which is the big fatal flaw.
We
I mean,
would
the
just be- we would
consumer
just be
is
achieving-
becoming weakened. I mean,
We
their
would just
wage
be
growth is
achieving
already
entrenched inflation.
the wage growth is already going down lower than the rate of inflation, which implies that the consumer is the one saying that I am going to eat some of this shit sandwich for everybody, right?
Yeah, the poors are always very willing to sacrifice themselves. Thank God.
Yeah, I love this. I love this. By the way, I just got shit on so hard, but it's there. There is the bull case because it hasn't been disproven, right?
Okay, but here's the problem. It directly contradicts the Fed's goal of price stability. Given all the currently available information, it seems counterintuitive.
You're forgetting the part where the federal government, right, can step in at any point and do something like, say, reduce interest rates for people with worse credit scores and increase them for people with better credit scores. Stuff like that.
Yeah, but
Well,
that's just increasing the future rate of default, right?
Yeah, I actually looked into that a little bit too. It was a little misleading, which I should have assumed because the original thing leaked from Fox News. But so apparently, people with the low credit scores that are getting a break of like 1.75, they're still receiving a higher interest rate than everybody else. It's just not as high as it used to be anymore. So they cut that higher excess, but they're still paying more. And then
So it's like slightly subprime lending.
Yeah, I mean they're just kind of weighting things a little bit more towards. They're putting a little bit more of the risk at the lower incomes to the higher incomes, right? The higher credit scores. And I still don't think that's a super great idea, but it's not as crazy as.
Alternatively, they're foisting off the cost of repair for the housing stock for the next 5 years to a group of people that are ultimately going to default and are being taken advantage of due to their minority or credit status.
So getting back to, I did look into it as well, and I realized that the monthly payment difference, is minimal, right, from this thing. But I'm just saying that there are forms of government intervention that can happen that can stabilize pricing. I know they're not the best because you rocket, your fucking debt to GDP to the moon, but there's ways to do it. And if wages, right, stay stagnant and pricing stays stagnant or comes down, right, due to some sort of government intervention, you can pull off another bull market. But I mean, I'm not saying it's going to last for like 2 decades. I'm saying that there's a way for SPX to reach new all-time highs without experiencing a major economic downturn, however slim they might be.
So it sounds like essentially what you're saying is, in the face of continued entrenched inflation, J. Powell money printer go burr.
Not J. Powell's. I think he's talking more about the congressional money printer.
Yeah. So there's.
Yeah, I mean, where have they been in all this, right? They've just been waiting. The Fed has, one knob it can turn, basically, right? And it's been turning its knob, and all of the congressional folks are just like, "How dare you turn this knob?"
J-Pow's almost pulled his knob off at this point.
And at no point, I mean, at some point, J-Pow needs to just grow up here and be like, "If you want more targeted relief or more targeted solutions, that's your job, assholes. I have a knob and I've turned it."
He's cranked his knob so hard, man. That knob.
That's almost a soft good at this point.
Yeah,
I mean, here's once again my problem with the bull case that you've presented, Dirk, is it still requires some, divine intervention to come from outside of the current scope of available information and fundamentally change the current economic situation, right? And as far as I'm concerned, every bull case I've seen so far requires the same degree of divine intervention. And I'm not a big believer in divine intervention. So I still think that the bull case is invalid because of that.
Well, it's not that it's invalid. It's just way less likely.
Okay, sure.
Right.
Let's take it back to
obviously,
the
I'll
most
concede that.
fundamental macro you can talk about, which is just simply supply versus demand, right? I mean, we all started this story with a crunch in the supply chain that has taken an extremely long time to work its way out. But what if it works its way out, right?
It's already worked out for the most part.
Yeah,
yet inflation persists.
Yeah.
I don't know. I have not seen it being worked out. I have seen, at least in my own industry, I have to buy a lot of consumables, a lot of various things from a lot of different places, and there's still just a big crunch in terms of available work, and maybe the conventional parts of the supply chain have been worked out, like shipping container prices and things like that.
I think labor in the supply chain hasn't been fixed.
I was just about to say that is the component that I think is the problem, is that people cannot find enough employees to work quickly enough and gain the skills fast enough, and so there's still a bottleneck in employees, and there's still folks in a lot of industries where they just can't get people to come work for them, even asking what would historically be considered quite a hefty sum of cash. People aren't coming through the door, and it's that's the interesting part to me, is we keep thinking that
huge
if the
swaths
supply,
of the population through the pandemic position themselves into areas where they could take advantage of their the company's corporation capex in different ways, right? I mean, you had people becoming streamers and influencers and product endorsers, and moving away from all these regular jobs and just finding another outlet of capex to take advantage of, right? And you found people becoming suppliers and distributors, and huge swaths of that labor market are never going to come back because they found out corporations are willing to spend more for the same thing somewhere else than they will on their employees, right?
Yeah, I mean, that's going to be the biggest, that's the biggest unknown to me, is I hear people like Paul Krugman and others talk about this immaculate disinflation, where perhaps we can simply experience disinflation without this pain in the workforce. But to me, it seems like fundamentally,
right? Technically,
yeah.
I mean, it's more of an idea than it is anything else.
Well, inflation is a function of buying power, I think, right? So reduced buying power is high inflation.
But buying power is subjectively decided by the participants of the society that you're in, right? It's influenced by the amount of money that exists, sure.
Yeah,
but only
for the
in
last
the sense
year and
that
a
it
half,
influences people's perception, right? Oh, everybody knows the government's been printing a shitload of money, so things should cost more, and then therefore they do because people think they should, right?
And for the last year and a half, Americans have been, not voting with their votes, but with their wallets, and saying that I will take on debt and I will blow out my savings and live paycheck to paycheck in order to keep sustaining the quality of life I have now. Right?
Yeah.
There is no give from the consumer at all.
I think, and that's why the Michigan survey spooked so many people that one day, because it was the 1 year, it was either 1 year or 2 year, I can't remember. I think it was a 1 year inflation expectation.
Went up by like
2%. Shot up from like 3 point something to 4 point something, and everyone got real spooked, because what people believe is what comes to pass, right? Because that's what they're willing to pay. That's what they expect to be paying for things in the future. And why wouldn't somebody sell you something for more if you already told them you're willing to pay more, right?
And the real inflation question, like, why would we have disinflation right? Why would we have disinflation when inflation itself is also a product of revenues, right? So you can't expect, like, we have a model in the equity market that continuous growth of revenue is the only sustainable path forward, right?
Yeah.
So with that model, right, how can we get disinflation without massive pain in at least equity valuations, right? It's just not compatible with our current economic theory.
Yep.
Like, so that's the biggest risk, and that's why inflation will stay high until the writing is on the wall that these corporations will not only have stagnating revenues, but steeply declining revenues if they continue to maintain high prices, right? And that's why, disinflation and deflation only happen, when it's already almost at crisis level. Like, we're seeing consumers who, based on the macro data that we get from Fred and stuff, like, they're already tapped out, and they're not only tapped out, but they're like going to, like, especially with interest rates where they're at, they're practically going to the fucking mobsters and saying, "Hey man, can you front me $3,000 so I can go buy this new LG TV that's like 95 inches and 6,000 frames per second?" Like, it's already happening. And I present a bull case, but I'm not bullish. I think everybody knows that. But like,
Do they make a 95-inch one? I need to get a new
I have no
TV if they
fucking
do.
clue. But
I
like,
thought they were up to like 85 or something. It was 83, 85 was like the big boy.
so the real question though, like the
Just
real
get a
thing we should be
projector.
asking ourselves is this, right? So
Gross.
let's say we have a big company, right? Let's call the nation Composite Company, okay?
Yeah.
Right. So we have Composite Company here, right? And here's Composite Company's problem, right? They're making some money, they're doing okay, but they do not have enough employees. Okay, like they just can't, and they're never going to get enough employees, let's just say, right? It's looking like they just will never be able to get more employees. What does that say about Composite Company? What
I
does it
don't know.
fundamentally say, right? So let's say, so put yourself in the feet of a business owner, okay? You got a business and people, you cannot get enough employees. You can't hire them, right? You can't hire them fast enough because there's none out there, right? So you got these 4 employees working for your company, and man, you could really, really do some magic if you had 10 employees, but you can't even find 1 extra employee. What does that say about the future of your company?
Your
It's that
productivity and growth are going to decline.
your growth is going to stagnate at best.
Yeah.
Well, they just need to raise prices.
Well, that's what they do, right? So you keep raising prices, but then demand starts falling, right? So
Well,
like,
you gotta make the supply and demand curve match, right?
But then your workers are seeking employment elsewhere.
yeah, because they
Your
don't get
current
paid.
workers are now looking for employment elsewhere because they can't afford the cost of goods.
Here's what I'm gonna do.
Yeah.
This guy, I think I mentioned this a couple weeks ago. I'm trying to find someone to do some work on my pool, and I called this guy who's like well known in the town, and he's got too many clients, and he can't find anyone to work for him. And my thought was, well, either raise your raise your rates of payment so that you can entice more people to work for you, or raise your prices so you have fewer so you have less demand.
You have a big
or do
problem if you're
both,
raising
right?
prices to lower demand.
I mean, that's literally what he wants to do, right?
I mean,
Or
like
do
that's
both,
like
right?
that's
You
like the
raise your
bear
prices.
case against FSLR, right? They have like 6 years of backed up orders, but no way to produce enough solar panels to meet them, right? And so like they have to spend money to continue making the money that they've already made.
Yeah, I mean, even in my company,
but I'll tell you, I'll call him every week. I'll bug this guy every week, and when he says he has enough employees that he can come to my house, that's when we just go full short into the market.
Why don't you just offer to pay him double, man?
I've considered it. I mean, I don't know. I mean, I'm assuming he's not a great business person, because if I was in his position, I'd be like, I have too many customers, not enough workers. Nobody wants to work for me at these wages, so I need to raise the wages and I need to raise prices to pay for those, and eventually that should come into equilibrium. But
oh, fuck
yeah,
off,
I don't
Watkins.
know.
God, he says the stupidest shit.
Like, he's literally like he's literally like pretty much saying, "Here's my bull thesis. We live in a society."
We do live in a society.
But at least coming full circle on earnings, I mean, unless things really haven't been all that surprising, right? I mean, the banks did better than expected. Real estate has done a little bit better than expected so far. They've definitely in these earnings, they've front weighted all of the good stuff, right? They expected financials and healthcare, maybe less so real estate, but they expected those things to do well, and they did relative to historical. So right now, it looks like the percent growth, the earnings estimates for this quarter are a little bit higher than they've estimated so far. I expect that to go down throughout the rest of earnings. But the surprise rate, the rate of the percentage of companies that are beating, estimates, has actually started to decline and started to go down. So it shows another sign of weakness. And so I think as we get into more of like the communications and more materials and some of those things, that earnings shouldn't look great.
According to the Fed, like the federal like manufacturing indexes, the manufacturing and industrials in the US has been fucked for 3 months. They're already like deep into a recession. There's been nothing but massive contraction across the board. So I mean, once we get more of Dow reported, I think that's going to be pretty significant. Everyone's always so focused on tech that they forget that tech is not the backbone of our economy. It just represents a very concentrated part of it.
Yeah. No, I mean, if you look at this current rally, it's almost all tech, right?
Yeah, it is all tech. It's like 88% driven by 8 tech companies.
If you exclude those companies, the market's just been flat since the banking crisis. Like literally, just everybody just went apeshit and bought bonds,
and tech.
Went to cash and bought a shitload of tech mega caps for whatever reason, right?
They think it's safe. They think tech provides a moat.
But tech is one of the most I don't understand.
They don't. Well, I mean, you have to remember that the vast majority of people do not understand what makes tech valuable, right?
Yeah.
I mean,
if AI does.
AI,
soft goods,
AI and soft goods, yeah. But they don't I think that many people don't understand the effects of contracted margins and lower access to capital on tech companies, and they don't understand that they're valued on credit being readily available and growth being nigh infinite, right?
Well, they're also valued on advertising revenues staying high as well, right? I mean, and
that's
that's
actually, when I was digging into Google, I will make a case for Google here. Ad revenues don't really go down a lot during recessions. They go down a little, but online advertising, which is cheaper, actually goes up, at least in the few historical examples we have, and the products being advertised change. But like there's less esoteric advertising in a recession and more like durable and non-durable advertising.
Okay.
So I will defend Google and maybe, Meta a little. I don't like to defend Meta, but a little bit on that point is that advertising should actually be, and historically, with physical advertising in the past, if you look at the Great Depression and stuff, advertising revenues remain relatively stable. You no matter what business you run, and some businesses are very successful in a recession, those businesses will turn to more advertising, right?
Yeah, that's true.
Yeah, I think what we're getting at though is really the multiples, and I think
the multiples are unsustainable. I mean, Nvidia's trading at 155 PE on the back of nothing. I don't care if they're getting $100 million a day for fucking. It still wouldn't be enough to match their current valuation over the next 5 years. Nvidia would have to increase their revenues, their last 5 years' revenues, by like over 100%. And their last 5 years of revenues have been the best the company's ever had, by over 100% over the next 5 years, to maintain their current valuation.
Yeah, like that's the big question I have, right? Like, so like AI, I love it. Like AI is super fucking cool, and I can't wait for my life to
It's really
become
not.
better.
It's really
But the
not
real,
that great right now. I
well,
mean,
no,
it's
it
they're
is.
too
There's some
early.
cool things. Yeah,
They're blowing their wad too early, and they're
that's
all
what
going to get.
that's what I'm getting at. I think that like there's things with AI that could be really cool, right? Like, and it's not fucking Chat GPT. There's a lot of really cool fucking things out there, like image recognition, all that fun stuff.
Yeah.
Like really powerful stuff. But like I look at these companies just going into Bard and fucking, I don't know, Dingbat and all these other things where it's a chatbot. I'm like, how does this increase your revenue again? What is this besides just burning money to make a cool interactive thing to
I
increase
mean,
your
well,
use
don't
a
forget
little
that,
bit?
you know, like Chat GPT costs like $100,000 a day to run. So idiots on the internet can ask it for dating advice.
No, I
Yeah,
mean,
like
but
where's
the
the
thing
revenue?
is that I do have some engagement with young people who want to be entrepreneurs and successful and engineering and science, and you ask anyone between the age of like 18 and 26 about chat gpt and they are like obsessed with it, and they are just convinced that it's going to change the world. They've used it to do some code of here and there. They've used it to write essays, right? A lot of it is, it's kind of like, okay, well, it does your homework, all right, whatever.
It's
That
a
doesn't.
cool tool. And if you're really, really smart, it's probably, you know, the productivity increase for an individual who's intelligent and knows how to use it as a tool is probably astronomical. Like I'm not
That's
going
a
to
key
disagree
there,
with that.
right?
Yeah.
And
Much
that's what's going to limit the widespread adoption of it, because it still requires that the person using it is smart.
Yeah.
Most people are not that.
I think it's got to be, you've got to be smarter than the AI, which is a high bar.
And like for example,
I mean, me and Dork fucked with it for like a little bit. We were doing some shit, and we probably covered more useless ground in 4 hours than we ever could have without it.
Oh yeah, it was great for that.
Yeah.
But like if you don't know what you're doing, like we were the things we were doing, like we would ask it to like produce some code for something, right? But the code was just like painfully wrong. And without, me there to sort of like analyze the code and interpret what it was trying to do, like it was pretty much useless.
Yeah.
Yeah, I've seen that as well. Like it drives me nuts. I mess around with Twitter when I'm bored, and I'll just start scrolling and look for stuff. And no matter how many times I tell Twitter I'm not interested in AI, like half of them are AI, and I just have to scroll past them. And most of them are just like, oh my gosh, AI is so awesome. Look at the 25 things that have come out just in the last week. And, it's all just clickbait nonsense. But there's a few people who are actually just like, here's what I tried to do with AI. And this one person was like, oh, I told my husband, I could, get an AI, chat GPT to figure out you're some sort of scheduling task that he had that supposedly took 100 plus hours a quarter or something like that. And she's like, I bet I could do it in 30 minutes. And like 3 hours, she's like live tweeting the process, and like 3 hours later she ended up with somewhere in the realm of sort of crappy code that had a bunch of problems that she would have to work on later, and ended up just not getting anything. But of
Yeah.
course, none of that dawns on anyone that it's cool. The idea is cool, but it's not actually producing anybody anything worth of value, except for potentially really smart people
Well,
who
it's
can
like
save a little bit
I
of
like to
time.
think of it as just like a productivity tool, right? It's
Yeah,
it's
I think that's more
probably it's
realistic.
probably the best productivity tool since Excel, right? But Excel
Since
doesn't have a
Clippy.
since Clippy, but Excel doesn't have, but Excel's not commanding like a $25 trillion future valuation, you know.
Not yet. Wait until they integrate Bard in.
They already have, you can already integrate Chat GPT into Excel.
Oh shoot.
Yeah.
Why are we not? Yeah, I
But
need to buy more
people are
Microsoft.
doing it. That's really easy.
You see,
Which is
my big
awesome for
AI
me
product.
as someone unwilling to use Excel, because now I can just have it use Excel for me. But
So I'm
the
not going to be
point
bullish
being,
on
the point being is that it's not what is out now, and its probable future iterations are nowhere near the value of what they're commanding, and then the economic fallout of the value they will create in productivity means that hundreds of thousands of current professionals who work in the mid-range of almost any profession will be replaced, and their degrees and economic participation will mean nothing in the future.
They said almost the exact same thing about autonomous vehicles 15 years ago, that it was imminent and it was going to
I don't think it's
collapse.
imminent, but
No, that's what people were saying.
Chat
right?
GPT is already smarter than most analysts I've worked with.
Oh, sure. That's not hard to do. But even I mean, if you think back to like the autonomous vehicle craze, which really started, in the mid to end of the 2000s when it really started picking up. And there were big car companies, this is back when Tesla was just like a little twinkle in the eye that hadn't produced anything yet. And
Yeah.
but all of these other big car companies, Nissan and other people were projecting that they would have self-driving cars on the road by 2016.
I mean, we already have them, right? Like, we already have the technology. It's just stymied in regulation.
So we have the technology. There's still edge cases that are making people slow to adopt. There are costs associated with it that might make it difficult to adopt. But even Uber, right? They kind of came out and said, our business model is unsustainable until we get to self-driving taxis, because people are too expensive, and that hasn't happened yet, right? And so the problem with self-driving cars was not necessarily that it took too long. It's just that everybody didn't realize that it was going to take a lot longer, right? And the exact same thing is starting to happen with AI and Chat GPT. I mean, GPT's been around for years, right?
Yeah.
I mean, and AI's been around since the 1800s when the first regression was done, right? I mean, that's all it really is. And so, when you think that, okay, now we are at the cusp where everything is going to start happening in a year or two.
We're still probably about 20 years from the cusp.
And so everybody has just pumped in, like they just all went all in on AI for the next, few quarters, right? They're like, this is the start of the beginning of just the pump of AI, and they're just going to get rug pulled once it becomes apparent that there's no way to really make a ton of money off of it until it does another 10 to 1,000x leap from where it is today.
You can't make it's actually a money suck. Like you need something that makes revenue, right? You like ChatGPT is not going to increase your revenue. It may in a workaround way, because you're starting to get people who use it who increase your revenue because of something ChatGPT told them, but you're not directly increasing revenue with your AI product, right? Like, I'm not going to buy into AI until someone comes out with a robot that folds laundry. Okay, like straight up.
I think that might already exist. I don't think it's affordable, but it exists.
Have you checked Alibaba?
Well, I mean, they have robots that can flip burgers, and that's kind of the same skill set, right?
Folding laundry is actually one of the hardest challenges of a robot. So that's why I kind of put my baseline there, like actually folding laundry. Like, you have a basket full of random articles of clothing and another basket to put them in. Like, it's a challenge. You have to pick up the item of clothing,
I could see that,
and orient it, then fold it. It's a whole thing, and that's why I think that as my baseline is a pretty good one. If someone comes up with a manufacturable, cheap, affordable way to fold your laundry automatically, I will officially concede that AI has made it into every household in America. Like,
but I mean, it's like
less work they will buy.
I mean, it would be like today if everyone just decided, oh, quantum computing is cool, let's dump $3 trillion into it, or companies that are looking into it, right?
IBM in 2015, didn't it?
Huh?
Didn't IBM come up with like a big old quantum computer in like 2015 or something?
I mean, they're all working on quantum computers, right? And maybe one day, right? And they'll solve a couple of they'll kind of screw all the cryptologists, because long passwords are no longer going to be the death knell of any hacking attempt, right? You just try all the passwords at once. But
That's why you need a quantum blockchain.
There we go. But like, I mean,
Bitcoin will die. What about all the Bitcoin money?
the problem is that hype.
It's like I'm going to unlock
right?
all the blocks at once.
The thing that's going to sustain products like ChatGPT and other things as it progresses is people using it and paying fees to mess around with it. And hype is so fickle and it burns so bright and it moves on so quickly. I've seen it so many times. It happens even in like science, which you would maybe be surprised about, but and so in maybe a year or two.
Are we going to talk about graphene now?
No.
Oh God!
Come on, JFresh. You must have gotten some graphene money along the way somewhere, right?
Yeah.
Oh, okay. All right. Good job.
Yeah, but no, people have already moved on to beyond graphene, and they've already moved on beyond that. I'm just waiting for them to get to the point where they're like,
where they move back to graphene.
Graphene 2.0. What I'm really waiting for is for them to take all these novel 2D materials and start stacking them and say if you stack the 2D materials, you get 3D forms of it that have different properties.
Fuck, 3D graphene incoming. Where do I put my money?
In pencil futures, I guess, because it's just graphite.
Yeah.
Anyway, I think I've already said that on this stream before, so now I'm just repeating myself.
But yeah. So until AI hits hardware, I'm not a fan. Like, I want hardware that's powered by AI that is useful in making my life simpler, right? And I'm being
Tesla.
I'm just gonna. I'm buying into AI as soon as they integrate it into a fleshlight. I don't know about you guys, but you can have your wild standards, but I think less of humanity.
You're probably right. Like, I mean, honestly, like maybe even games powered by AI would be a big boon, right? Like you make a video game, you connect to the internet, and you're hooked up with an AI, and the AI just procedurally generates the entire game for you. Like, that would be an amazing revenue generating thing for a AAA game company, because then they can just produce an AI that procedurally generates the game.
You should email Ryan Cohen. He can talk about this in the next earnings.
You pay like a monthly fee to.
Yeah. You got
it. I actually kind of love that. I mean, that just in that few sentences, it becomes immediately clear what the value is. That's kind of awesome.
Yeah, like there's ways to integrate AI into existing products and also solving everyday American people's solutions, that could be wildly profitable. Like a laundry folding machine, if it costs $120, who the fuck isn't going to buy that fucking piece of shit, right?
It won't cost $120.
It will.
Here's the thing, though. After we integrate AI into sex robots, does humanity ever progress further?
No, it's Brave New World. Then we're going to have AI robots that inject specific chemicals into our bodies to make us feel certain ways.
Nice. Yeah, that'll be the end of progression, though.
I don't see
any goals for AI like Skynet. That's never going to happen, because first we're going to have sex with the AI, and then we're going to demean it.
Well, then the AI is going to figure out how to pleasure itself, right? So once AI it's just shut off and masturbate.
That's when you know it's finally become a human.
When the AI tells you it has a headache.
Oh God.
I was too tired.
So anyway, speaking of AI, NVIDIA mentioned, Elon Musk in the earnings call mentioned, Tesla. Elon Musk in the earnings call mentioned NVIDIA and AI, and that they are poised to, with their large learning models of, self-driving cars, they're poised to take over the autonomous taxi industry, which sparked ARK to give it a $2,000 price tag. Or
NVIDIA?
No, Tesla.
Oh. No one cares what Kathy Wood says about Tesla or
$2,000.
Yeah, she's also valued Bitcoin at like $2 million in 20 or next year. Or
Who's
whatever.
giving her money?
People who need
prescribing
liquid.
that?
Here's what I assume. I assume that she says a bunch of outlandish shit about stocks right before she buys them, and then she lends out all the liquidity to volatility shorters.
That's interesting.
She'll build up. What she'll do is she'll stock up in the ETF, yeah, and then pump it.
Yeah.
I mean, easy peasy. You make so much money on the fees and arbitrage that it's amazing. But
I mean,
like,
someone out there is like, "Oh fuck, Kathy Woods just valued Tesla at $2,000. I better buy some."
Oh my god,
There's got to
criminal.
be at least 5 people that have said that to themselves.
It seems criminal, right?
It is, but
like
because
watching all of these analysts just continuously pump these upgrades out.
It was like the day the market was gonna fail, and every bank upgraded every tech stock.
Yeah.
well, like the thing is, Jay Fresh, you're forgetting that once you get a CFA and you pass your Series 7, I mean, what is legal and what is illegal in terms of investment advice becomes way more lenient, right?
Oh yeah.
Like if you get if I got my CFA and I passed my Series 7, then I could go on the internet and just literally say buy Bed Bath and Beyond. You're not going to regret it, and like I'd be in no hot water.
Actually,
right at the very end, I just say
you do know legally I could do that. I could say the most like I'm not because I don't have a Series 7. If you have a Series 7, you're actually held to a more stringent standard. But if you don't now not with your own clients, if you had clients and a Series 7, you can go to your clients and be like, you need to buy all of this shit. And you could be completely wrong, it doesn't matter, but they're your clients, right?
So you write a letter to your clients and then have it somehow get leaked to the press for them to put all over the internet.
Yep. There you go. Nice and easy. Or you can, if you're in a big institution, the even easier way is to just say that you heard a rumor from somebody. Right.
I love it.
I mean, think of how many people on Superstock have reported me for stock manipulation.
Well, if you would just DRS your shares and pump BBVY, all of that would go away, and you know it.
Yeah, but I mean, I think
BBVY announced bankruptcy, and the Superstonk cohort that moved over to BBVY is already talking about how bankruptcy is good. They filed Chapter 11 and not Chapter 7 because they're going to get acquired and they're going to negotiate their debts to continue and be born anew in glory. And
I changed the name of the BBVY channel this morning. It's now throw another shrimp on the BBY RQ.
That's pretty awesome. There's still people in there? Who's still in there?
There are. I mean, mostly it's people making fun of the people that are still in there, but there's still like 7 people that won't give up.
Okay. I mean, I don't mean to laugh at you, but I am. I think it really sucks.
I think the important thing to note here is that we're not laughing with you. We're laughing at you directly.
I mean, because
you're an idiot.
Losing money sucks, but you gotta let it go. They're filing for bankruptcy. I'm pretty sure I read that they're going to start their liquidation sales this week. I mean, it's over. It's over.
You should also, like, anyone in here, right? Anybody who's been in here since like middle of last year should have it deeply ingrained in their brains what happened the last time that a company went bankrupt with Chapter 11, right? And we got all bullish on it, okay? Everyone in here should remember that. And if you look at the Bobby subreddit, you can see the exact same thing playing out. Like, to a
Are you talking shit about Revlon right now?
No, I'm talking shit about I'm talking about shit about us.
Hey man, Ron Perelman's gonna recall all his shares and save us.
He still might, but
all right, guy who's already said 1,000 times that this is just a tax write-off.
It is a tax write-off.
But yeah, everybody should really be very salient of the kind of speak that is happening around Bed Bath & Beyond right now. And just remember that this is officially the exact same play as fucking Revlon, and you should expect
No, it's worse. Bobby got bailed out of their bankruptcy before it ever happened. At least Revlon's bailout of their bankruptcy was profitable.
Yeah.
Don't forget, there was a period there where you could sell $35 calls for Jan 2024 for $5 each.
Yeah,
You'll never be able to do that on Bobby.
that's what I'm saying. Like, and yeah, I just hope that I honestly, it's not even hope. I'm pretty confident that at this point in this whole entire pickle saga, that the people in here can see with eyes unclouded by unreasonable bullishness, right? Like it's that's kind of, I think the slow progression is happening, and it's giving me a lot of hope to see more reasonable speak about even GameStop, right? Like we, from just like a year ago to now, like the level of bombasticity with which we have been talking about
That's just
GameStop.
because those people left.
Yeah, it's partially that, but partially people come to their senses. I mean,
Yeah.
Some people
like,
did, including us.
yeah, like I mean, well, it took the data, like
Yeah, it took a lot of data. Yeah, I agree.
yeah, we as we digested more data, we started to realize, okay, this is not as out of control as it seems like it was. Like back in March, it was completely out of, like, off the rails, but like now it's like seeming more like, okay, everything that's happening is well orchestrated and completely under control. So like, the expectation drops, but like I want to say that I'm proud of all you pickle jar members, because you have gone
Gross.
from
Ugh.
complete insanity where most everybody in here started, which was absolute irrationality, right? That's, I mean, think about the change, right? I mean, the GameStop was completely a cult, 100% a cult in 2021, 120% a cult, and our ability to free ourselves from the shackles of unreasonable bullishness without any data backing it is truly incredible, and I think everybody should get a pat on the back for that.
Just me.
But now the next step, the next step is to not lose money. Now that's the next step, and to not be unreasonably bullish on your positioning. Right.
Yeah,
That's
but
what,
you also have to accept that most of the market is unreasonably bullish as well.
yeah, of course, but like you're not. But I'm saying that you're not. The unreasonable bullishness in the market has to do with somewhat logical reasoning. But that's kind of just the background, right? You have to accept your environment. Markets change. Markets stay the same in some ways. But the next step is to make sure you do things like, when you see Nvidia being grossly overvalued before earnings, you buy some puts because their earnings might not be so good, and then when they're not that good and the market stays unreasonably bullish, right? You don't just get super bullish on the idea that maybe this is all just going to be a giant rug pull right after earnings, right? Like you have to not get entrenched in your position psychologically, right?
All right.
That's the next step.
So let's bring this back down to earth next week.
Yeah.
What's the strategy here? Because I'm seeing, there's definitely been an undeniable strong long-term trend to sell volatility on the market. We're kind of near the top of that range. Do we think that there's enough of anything that could come out next week that could push us over that 4175?
Hear me out.
4200
Hear me
edge?
out. Strategy wise, and this is going to sound crazy, but it just might work. Negatively delta skewed straddles. Just
Yeah, that's kind of what I was thinking.
No way,
I know it's outlandish,
dude.
but imagine just having like some calls, but more puts.
I don't like it. You got to pick one or the other.
Bro.
It's
I
like
kind of agree.
How do I full port a direction without picking a direction?
It's like a kaput. We could call it a kaput. It's half calls, more puts.
Could I call it a puka?
Well, eventually you could cut the A and the C and just have puts.
Yeah, no, I'm kind of thinking that too. I mean, you want to have some exposure, I think, to the potential for long haul, and obviously slightly down is more probable than up, but flat is also not an impossibility, right? It seems like we're kind of at a stalemate. Nobody really, unless there's going to be something to really rattle the short balls chains.
Double butterflies.
We could just have a week of nothing, right?
Iron
Yeah, I
condors.
expect data burn. honestly. Like I just expect like my positions to bleed,
So
and
sell
I'm gonna
theta.
sell. Yeah, I mean, you
Like
could
if
sell
I
theta,
mean,
you
it's
can
so
sell-
options are so simple, right? Like I think everyone needs to hear this too. You know, if there's a point in your position that you have a complaint with, something that's really fucking your position, you can address that. If you're losing theta, sell it to someone. If you're losing delta, buy the opposite delta. So buy negative or positive delta, right? Like if you're losing vol, short it. You know,
yeah.
like it's you know, everyone always asks me how to hedge. It's pretty simple.
Well,
You know,
and it's also
just do the opposite of the bad thing that's happening to you.
well, and you can go even a little like a step deeper too. Like let's
Careful.
say, I know, but maybe also what you can do is you do this crazy thing that I've heard of people doing. I've never tried myself, where you develop a strategy and you evaluate your risk, right? So me, I am long vol to the downside on SPY, let's just say. I am, but my strategy, it takes into account the fact that I'm going to be burning theta over time. So what I do is I have a background thing called scalping that I do where I make just enough money to offset the theta burn,
To be fair,
right?
but we have like an 80% win rate on our scalps, and that's not fair.
I mean, kind of, but there's strategies you can employ, you know, like,
Yeah,
I don't
and
like any of this strategy. You've lost me. I'm out. No
yeah.
strategy.
I know,
This
Jay
is some
Fresh,
Fresh.
fucking shill talk right now.
Full port puts.
Yep.
I
I'm just
know,
gonna buy
right?
more puts until they print.
But like, you should always have a
That's what I've been
background.
doing on Nvidia. I just keep buying more puts. Like I make
Well,
money on the call side and selling theta on Nvidia, which is really profitable. And you could offset tons of losses that way. But instead of offsetting losses, I compound my future losses by buying more puts.
Yeah.
Yep.
well, you see,
That sounds about right.
your risk tolerance is a smidge higher than mine.
My risk tolerance is everything I have. I don't care because
Yeah,
I can rebuild it, right? It doesn't matter. It's just money.
Yeah.
Because
My
you have
risk tolerance is pretty low. Most of my shit's in bonds. This is just my F around money.
Yeah, like you have it, but you see, Girk, you have strategies in place in the background, right, that you are using to offset your losses, right? And
I mean, I'm
this is
using
where
them to generate more capital so I have more money to lose.
right. It's the same thing. It's the
All
same,
right. Well,
but
thought process getting there is a little different.
right. Well, yeah, you already had those strategies in place, and but you know the if you're dealing with like if you're going to risk a significant portion of your portfolio, like more than 10% on something, you should develop and have a very clearly thought out strategy in order to protect that 10% of your portfolio. Otherwise, you're risking a 10% loss, right? You know, you need to have some sort of way you need to one, you need to quantify your losses as they happen, right? Or as they could happen. So let's just say you buy option on stock A. If it trades perfectly flat, you're going to lose money, right? And so you should assume that that money is going to be lost, and this isn't going to play out until within a few days of your time limit, right? And just completely build out your strategy with all the losses and everything sort of uh, forecasted in a way where you could offset them, right? So if it's just pure theta burn, which is what I'm offsetting, like if the options go down in value because IV gets fucked, which it has been doing, I'm losing a little bit on the position, but at least I'm making back the theta.
Yeah,
I'm
Like,
just gonna buy more puts. I couldn't even listen to any of that.
I know.
you
That's
know,
it was really.
you can never be 50% down if you average down every time you're 49%
When do
down.
we start a fund so we can stick Dork in fixed income?
You know, love it. I love it so much.
He'd just be delighted. BOJ plans to examine its policy taken over past decades, according to Sankey. That's not good.
That's good for you, Gert.
Bullish.
Well, yeah, it's great for me, but that's just because I
Everything's
called it a
bullish.
year ago.
Goddamn. Yeah, things do not look too bullish right now. I mean, monetarily speaking, they don't look bullish, and that's like the big one, right? So,
Yeah, everything's big fucked.
like, if the monetary situation doesn't improve, I mean, how can you be bullish on future growth?
True.
Oh,
I'm not.
something-
That's
I
the
mean,
trick.
we got to wrap this up, but something we didn't talk about at all: VIX 1D
Oh,
tomorrow.
yeah, I'm super
yeah.
excited about it. It's going to improve the accuracy of all of the thingies we do.
Oh yeah,
All of our
I'm
market magic
super excited.
is going to be
see
so
some
much
of that.
more accurate, not looking at a 30-day window
What's really going to be
where no one
fascinating
actually buys options.
to me? So I mean, I'll say a little bit of why we're so excited about VIX. I mean, the VIX 1 day. Basically, what the VIX tells you essentially is bought versus sold, which is something that's hard to do in real time.
And that's
so
enough bragging. Thanks for coming on, Jay Fresh. We appreciate having you here.
Anyway, it's gonna looking at the difference between the VIX 1 day and the traditional VIX, I think will be quite interesting to see.
Here's
what I
my
think is
question:
happening.
when do market makers just start pricing in VIX 1 day? You think it'll be this week or next week?
I don't know. I don't even know what it's going to look like. I mean, is it going to be wild? Is it going to just be?
That's going to be fucking insane. There were 350,000 calls open at 155 the other or 41.55 the other day.
So
can you imagine the skew?
I just can't. I'm so excited to see it. I just imagine it's just going to be just like a wild like fire hose just flopping around all over the place.
That's going to be fun. I hope they open options on it. I'll only
I am excited about the prospect of being able to provide the pours with even more confusing charts with even less context.
Ooh.
Yes.
Maybe we can like ghost one of the lines. So no y-axis, no x-axis, right? But also one of the lines isn't visible.
Ooh.
Right?
I like it.
I do too. It's like a fill in the blank line. Or maybe we could just create like a small standard deviation window so that they know that the line is somewhere within that window, but they don't know the exact placement of the squiggle.
How do you know I'm not doing that already?
I know you are.
Yeah, I'm excited. I think that it's like, the market makers, I think, are probably pretty prepared for something like this.
I mean, I have to imagine that they've test piloted this.
Yeah, so they're probably pretty prepared, but
I want to say that the market makers are just really pissed, and they demanded that CBOE update their volatility indexes to include the inane amount of 0 DTE purchasing because they can't price options correctly.
Yeah, I'm sure, but like I'm excited for the prospect of these market makers have thought of a lot, right? But once it goes into production, right, once it actually gets out there in the real world, there's going to be opportunities for some sort of arbitrage, some sort of weakness that can be identified. And before it gets closed up, I think there's probably going to be some pretty good opportunities out there if some smart people.
So far, I've got this intraday VIX 1 day spike, sell bear call spreads.
There you go.
Yeah.
So that's going to get closed up pretty quickly because.
Oh yeah, it's going to get ruined.
But there's other ones you can do too. I won't discuss them too much here in case there's any market makers listening. But there's ways you can figure out to 30-day, 1 day, and even if you have your own analysis of the options chain, right? You can even look at
Here's my question: when leverage short VIX 1 day products?
Tuesday.
Okay. Barclays should have one out by next week.
Since we're all just asking or telling what we want to know, what I would really like to know at some point, who are the players and what were the decisions that went into developing all of these instruments, right? I mean,
everything's remember this, everything's a band-aid.
But at some point the CBOE said we need 0 DTE options.
More money.
For what, right? But
options were getting too expensive for people and liquidity was fleeing the market. CBOE didn't want to make less money, so they found a way to make more.
And they didn't make 0 DTE options. They just opened more expirations, right? Yeah. They made it so it's a daily expiring thing, more so than it was like.
Well, because now on Monday, you can buy an out the money option for $800.
I get, but was there really enough push from the market?
Yeah. I mean, look how much 0 DTE options buying has exploded.
how, but
Look at the pushback too from institutions on people like anyone who proposes, not having 1 day expiry, like everyday expiry options. There's always, anytime there's talk of it, and on the regulatory side, there's significant pushback from institutions.
Imagine if everything just expired on Friday, like
It'd be so volatile.
I'm kind of hoping that the VIX 1D will help, because I think what's going on is all these people are just selling volatility long term, which is showing up in the normal VIX.
Yeah.
And then hedging that by just buying crazy amounts of,
Well, we'll know when
contracts.
Citadel reports $1 trillion in earnings this year.
Oh man.
So they're just yeah. And I think that the VIX 1D is going to show us that that's exactly what's happening, and then potentially we could see, when those things are breaking down, because there's no sense in fighting if that's what everybody's doing. You're not going to beat that, right?
No, but you can make money off of it.
Right, but you're not going to make money off of it going long one direction.
No, straddles have been phenomenal since October. I'll say that for the 900th time.
Long straddles?
Yeah. You just at close, you buy a put and a call at the money, and then the next day, both of them print.
Oh, I'm Gork. I'm so rich. I can buy.
I can buy 2 options on SPX. I can get fucked poor.
I'm so rich.
Yeah, I mean, sure. I'm sure on intraday you can, right? And that would be consistent here, but like long term, it would be tricky.
You can make like 5% doing the same thing with SPY, maybe.
Yeah, it's not as good.
The IV crush on SPY is way harder on 1DT than it is on SPX.
Yeah.
So it's hard
because
to
of
make
all the demand.
You can't do it on XSP. The strikes aren't liquid enough.
Yeah.
It can only be
Yeah,
done
exactly.
on SPX. It's only for the rich. The poors aren't allowed to make money on volatility.
Just don't be rich. Don't be poor, bro.
Yeah.
Don't be rich either.
Get another job.
They're
I hear
basically
people are
just-
hiring.
Yeah. All right. Well, so next week, straddles with a bias to the downside, because there's more
Negative
down
delta
than
straddles.
Yeah.
I'm just gonna keep rolling. I'm just gonna keep puts going and scalp. That's what I mean. Same thing.
Yeah.
Just intraday upside.
We'll all watch them get destroyed when the market goes nowhere and VIX goes to 15.
What about me wanting to buy 5-cent puts on everyone who has earnings? Should I do that? I'm gonna do it anyway. I don't care what you guys say.
Someone's gonna do it.
Hey, you gotta. I appreciate the contribution to the market maker.
Credit Suisse tomorrow morning. First Republic Bank tomorrow afternoon. Those are going to be the fun ones. And then just all the mega caps this week, and everyone just ignores. Everyone says AI, reduce margins, reduce revenue, but AI. So yeah, that will counteract whatever will happen with the banks, and we're going to close the week within 0.5% of where we open tomorrow. In IV or VIX will be under 16. And
12.
all of our
VIX to 12.
That's hard to
market's
do
a 40-80.
Yeah, I mean, we're already pretty much well outside of one standard deviation of my SPX VIX.
What if the Moody's downgrade?
Why not make it 2? Let's just make it 2 standard deviations.
What if the Moody's downgrade just means that ES opens like 60 points lower?
That's all it's going to mean.
Yeah, right. Well, I mean, that's the rest of SLD.
And then it just slowly drifts back up to spot.
Well, by Wednesday or Thursday.
Yeah, maybe. Yeah.
It's all priced in, bro. Everything. It's all priced in.
The heat death of the universe is priced in. All right, guys. Thank you so much for coming on. Let's wrap it up.
All right. Good luck, everyone.
Option strat.
Have a good weekend, everybody.
Have a good one, guys. See ya.
Thanks for having us on.
All right, guys. If anyone has any questions and I was unable to get to them, hit me up on the Discord. I'll be around for the rest of today. Thank you so much for tuning in, and I'll see you tomorrow morning. Have a good night. Oh, Pickle's Picks will be out. I don't know when I feel like it. Tonight. Later.